Greetings, Season 2 listeners. Today we'll be discussing Beginner Property 101. I'm John Lee, the main host for this season, joined by today's guest, Jonathan. Hello, Jonathan.
Hello, John Lee. Thanks for having me on.
Hi. So, could you tell me about yourself, John?
Oh, okay. I'm Jonathan. I'm a practicing real estate agent. I before this I graduated with a law degree, but instead of practicing law, I kind of prefer being around a lot of people. Whereas law degree kind of being a lawyer kind of put me in front of a lot of paperwork. So that brought the transition. I've been practicing as a property agent for about 10 years. And then I've been acting as a property guru, educating people about real estate related topics for about 3 to 4 years. Um, what else? I'm based mainly in Kuala Lumpur, in Selangor, Klang Valley. Yeah, I think that will be about it.
Jonathan, you also do TikTok, right?
Yeah, I do.
Why don't
I
you
TikTok handle
spill your
called,
username a little bit?
oh, okay. So my TikTok handle is called Let's Talk Property.
Let's talk property. How do you spell it? And is there like any punctuations?
Um, it's all small letters, LETS, and then TOK, the TikTok's talk, and then property, PROPE. Sorry, I can't think.
RTY.
Yeah.
Let's talk property.
Yes.
Okay,
Correct.
that's a very stylish name. Thank you for introducing. And also, dear listeners, note that the contents discussed can be subjective and not applied to everyone, meaning it's limited to the speaker's experience and some limited to audiences with different
Disclaimer,
tastes.
everybody.
Yes, it's not really for everybody in like every situation. Okay. So let's start with the first question. This is a very important one. Every time when you get to know something, you need to know the definition first, right? So what is real estate?
Okay. So this one is a little bit of legal knowledge here. So usually when we talk about what is a real estate, we talk about the legal meaning of what a property is. So according to Malaysian law, the main law that governs law on the on Malaysian soil is the National Land Code. And then for Penang and Malacca, you have the Penang and Malacca titles National Land Code. And then for Sabah and Sarawak, you have the Sarawak Land Code and the Sabah Land Ordinance. So basically, what all these statutes say is real estate is something that is either a land or it has to be something that is permanently attached to a land, like a building or a construct, that kind of thing. So that is the actual definition of what a real estate is. So if it's something you can move out of the land, then it's not a real estate anymore.
So what if like because buildings, right, you can break it. Then is it not, if you break it, then is the real estate status like removed?
Yeah, if you destroyed the entire thing, then the status of that property is diminished. But because it's still on land, so they still consider the piece of land the real estate. But let's say, for example, in overseas, US, UK, they have this thing called caravan. People like to go and stay instead of staying in an actual house, they stay in a caravan. So caravan isn't really considered a real estate because it's something you can move around. It's more of like a car, more of
Transportation.
Yeah, correct. So yes, real estate has to be something that you can't really move from the land.
I see. All right. So is this only limited to Malaysia, or like can this be applied to other countries?
My knowledge is only limit. To my knowledge, I think it's only in Malaysia because I have not seen the land codes of any other countries yet, apart from UK and Singapore.
So real estate, you have to have the land code to be defined as a real estate in Malaysia, right?
Yeah, correct.
Okay. And it's National Land Code, NLC. All right.
That's the mother of all laws
That's like the fundamental. All right. Then we talked about the real estates, and when we talk about real estate, we don't really talk about land code, but what we usually think about is we think about properties, right? Real
Mm.
estate and property is really closely linked together. So like I want to ask like what type of properties are in Malaysia or in the real estate market?
Colloquially, meaning like in layman terms, we usually separate them into uh, 4 categories.
4 categories.
Yeah. So these 4 categories are basically residential for somewhere you can stay, and then commercial. These are like shops, offices, hotels, shopping mall. All these are under commercial as well.
Mm-hmm.
Then you got industrial. So industrial is like another branch. It's like a factories, warehouses, mainly for businesses. They are very different from almost similar to commercial, but they
Mm.
are. When I was studying law, one of the main reasons for this separation is because of the type of pollution that comes from industrial. So you can't really have a residential next to an industrial area, but you can have it next to a commercial area.
Mm.
And then the last type is what we call special purpose properties. So these ones are like they are neither commercial nor residential. They are specific. They are for a very specific purpose, like a school, hospital, army camp, police station. They are also real estate, but they are not something that you go and buy and then you trade around for capital appreciation and so on.
Oh, so it's for government.
Not really government either. Like schools, hospitals, they can be private entities,
Mm.
but they are built only for a specific purpose. Like you can't use a hospital to do anything else.
Oh, so what how does special purpose properties work in the real estate market? Like how do you invest in those? Do you not invest in those at all?
Uh, there are people who invest in special purpose, like there are companies that buys up schools, like international schools in Malaysia. Different KDU will buy some schools or build new schools, and then they make profit out of it. Likewise, hospitals, KPJ are known to buy up hospitals throughout the entire Malaysia. It depends on what that property is. Sometimes you might need to have a license to be able to own the property. Like for example, a law firm or real estate agency, you need to have a specific license to be able to own that kind of property. The license is usually authority to be able to conduct that kind of business or to use that property for its purpose. So yeah, there are certain restrictions to ownership of that kind of property as well.
Mm. So special purpose properties is like very dependent on what you have and like who wants it. It's not really recommendable, right? But I've never really heard of how you can invest in malls. I actually know like I've actually seen like a lot of people invest in apartment and condo. Like they have this model in like the shopping malls and like they show you and then they show you how, like they keep telling you how great of a deal it is, but like I've never seen a mall real estate trading.
Let me introduce you to some easy to enter kind of mall investments. They are known as REIT, called Real Estate Investment Trust. This one is actually a share actually. So you buy the share of this particular company, and then the company is actually a trust company. So basically what happens is they will buy real estate, usually specific segment type of real estate. Then after that they will collect rental or they will have profit for the real estate that they own. And then according to law, they have to give back 90% of that profit to whoever is their shareholder. So
So
some of the famous REITs in Malaysia that own malls are like CapitaLand. They own the Queens Bay Mall. They own what's that mall? The Mines. They own the Mines. And then our Mid Valley. Mid Valley is owned by another real estate investment trust, IGB. Yeah. So you can actually buy these companies and then you become a shareholder of Mid Valley itself. So imagine you buy IGB. Share price, I think now you can buy one lot for about 200, I think. Like I didn't check the price.
$200 or ringgit?
200 ringgit.
Oh, one lot for 200 ringgit.
Yeah, you can buy, it's 100 shares, and then each share costs about, I think one ringgit 90 cent. I can't remember. I didn't check the price for quite a while. So you imagine you use 200 ringgit and buy one lot, and then after that you can go tell your friends, oh, I'm a shareholder of Mid Valley.
Wow, I actually didn't know this because for me, what was prominent in my mind was real estate and stocks are like a little bit different. I never thought like the concept of stock market will be applied to the real estate market as well. But that's also interesting. So
Save that for another podcast one day.
yeah, we should.
Broad.
Yeah, but like, see, this is really interesting because during MCO, stock prices crashed like hell. But that means real estate prices also crashed because nobody really wants to buy the property right now. And like it's kind of the expected price to rise is very low, right?
Oh yeah.
You don't really expect real estate's price to rise during MCO period, right? So
yes. The real estate industry, even if there wasn't an MCO or there's an economic boom, real estate tend to be the last to rise because it's supposed to be a like a
stable investment.
form of investment. People usually buy them to hedge inflation rather than expect some heavy lump sum of profit. Like you do see a lot government actions like adding of RPGT or putting limitations on what the developer can build, and having the, like for example, if the developers to build a residential property in Malaysia, they have to follow the Housing Development Act. So they have to follow certain criteria on how they can develop a property, on how they can even obtain licensing. So real estate in general is supposed to be the most safe form of investment. And because it's so safe, the returns are also quite slow. Like you need 10 years, 20 years to really see the returns really build up.
So it's something like investing in index funds and ETFs, if you look in a certain way.
Kind of, yeah.
More of hedging instead of like.
Oh yeah, there are certain people who make comparison between buying a bond,
Oh yes, bond.
Yeah, as opposed to a real estate, because both also are very safe. Both are almost guaranteed to give you returns after 10 years. And both are something that ultra rich billionaires will look for, rather than
because they have to focus more on maintaining their wealth.
Yes, correct.
But I also heard that real estate market can be heavily influenced by the economic situation in certain times. So like I feel like it's very important to know what the current economic situation in Malaysia is. So can you tell me about the Malaysian economic situation right now?
Okay, so this is data I've gotten from our Department of Statistics. So in 2021, about Q4, which is last year only, the Malaysian economy experienced a recovery of about 3.6% to its national economy. So in that recovery, if we are to analyze what created that recovery, it was mainly the e-commerce boom that was driving everything. Everyone who managed to bring their business online, they are successful in making sustainability, and not just that, they probably make a hell lot of profits. Like Netflix, very, very profitable. So if we analyze that, we notice real estates that is associated with that trend are doing very well. Like logistics were one of those that were very popular during the entire pandemic period. While we are looking at every form of real estate dropping in value, warehousing and factories, they were flying up in the sky. Like there is almost no availability. No one was selling a factory. Very few were selling a factory. Very few were selling warehouses.
Why were they selling it though?
Well, quite a lot of reasons. It could be pandemic hit them, they need to cash out, or their business weren't able to adapt fast enough. Like there were quite a number of businessmen who weren't ready for the pandemic when it hit, and then they were forced to close down, and then because of that, they had to sell their assets to cover their losses. So one man's fall is another's come up.
Yes, it's always true. There's like, if there's good, then there's always bad. If there's like, what do you call it? A dangerous situation, there's always like a profitable situation, I guess.
Likewise, if you notice, because of the work from home phenomenon that is going around the world now, you don't see office on the other hand having a good increase in price or a good capital gain for that matter. You see residential property slowly picking up now because everyone realized they want to have a bigger house, they want to have a space where they can work from home. Like you and I, we both have studio compounds inside our house. So we kind of look for, instead of looking for a 2-bedroom last time where we probably one room we have a friend or our parents and another room to ourselves. Now we probably look for a 3-room, one room for our studio, and then the other two. So this kind of changed the property market demand a bit. And office on the other hand, suddenly there's no need for, like, I haven't went to my office for 3 years.
Oh, since the pandemic started.
Yeah, since the pandemic started. And my company, Redfield, we kind of went fully automated. So even our forms, our paperwork, everything is virtual, everything is on PDF. So even the admin staff also is like discouraging us from coming. Don't bring the pandemic to our office.
I guess it's very nice, like people encouraging more digitization. It's more sustainable for the environment. It's more sustainable for the company as well. They can save costs and reinvest into other sectors as well.
Which is a good point you make. Another area of real estate that probably might be catching on very soon is sustainability type kind of real estate, like properties that gotten green building awards. We are seeing a lot of them become very popular. A lot of this green building award property, you have like efficient usage of water, electricity, or water bills probably are lower, and that kind of thing. Recently, we are noticing a very upcoming trend in that direction, especially in the businesses. They are all trying to cut costs, use less electricity, and so on.
Environmental sustainability.
Yes, correct.
I guess that will be the major trend in every market, actually, real estate, even like just for in general for businesses. So we've talked all about this, right? But like, what's your opinion on being interested in property? Like, why do we have to be interested in this real estate market?
Okay, this is my personal reason, which is also the main reason why it got me into real estate rather than staying in any other profession is if we compare the asset classes that we can buy and then it can help us build up our wealth, the only one that falls within the category of a necessity is the real estate class. Like a share market is not a necessity. NFTs, Bitcoin, all these are not necessity. Sooner or later they can be replaced. But real estate, having a house, this is the one thing that is very hard to replace unless someone managed to figure out a way how people can stay in something that is non-tangible. I think real estate is going to be staying with us for the rest of our lives. Like it's impossible to imagine sleeping in a place that is not a house or a building for that matter. So I think that's one thing that I always remind myself. At the end of the day, this is a necessity. Everyone has to buy one sooner or later. It's just what is the price we are willing to pay for real estate. Yeah. So and then as long as it's well maintained, there's no big underlying issues. Like there's no management dispute going on. Generally, real estate will always grow in value. I haven't seen one that doesn't.
So you're saying like as inflation rate goes up, real estate goes up as well. So like you don't have to worry about anything and like making any losses in the long run. Like
Correct.
in the short run, you can make losses, but like in the long run, you will always make profit
Yeah, correct.
or always go up in value. And you've mentioned like it being labeled as a necessity, right? I feel like that's a very significant part, like a very important reason why you have to invest in property, because even businesses like to promote their products as being necessity,
Mm,
even when it's not a necessity. Even luxury goods, they like to promote it as a very necessity item, right? I feel like having that label really increases the value of the market.
correct. Like imagine if you are investing in agricultural land, um, the one way of looking at it is one day inflation will come up to a very high point, and if food become unaffordable, you having a agricultural land to yourself, it really makes a huge amount of difference.
Yeah, I feel like even in any situation, it will go out anyways in the long run. So I feel like having a land or having a real estate is is really good. But sometimes there can be like obstacles when you're trying to enter the real estate market, right? So what's your opinion about what's the advice you want to give them? What must you note when you're buying properties?
Okay. The first thing to note is, regardless of what type of property you are buying, um, there is this thing called down payment and upfront capital that you need to be aware of. This is the biggest barrier of all. This is the biggest the elephant, if you will, for buying real estate. So how it's calculated is something like that. The first big cost is the down payment. So basically, that is 10% of the property price. Its purpose is to secure your interest for the property and to tell whoever is selling the property that you are serious about buying that piece of property. So if it's 10%, imagine you are buying a 3-bedroom for about 500,000. So 10% can easily come up to 50,000. You need to have 50,000 in the bank, and you have to pay it then towards the buying in cash. So that is really heavy. Then if you add up other costs, legal fees around 1 to 2% of the property price. And then Malaysian government also implements stamp duty. So stamp duty is the cost of legalizing your document. And then at the same time, inside stamp duty, you need to pay for what's called the memorandum of transfer. So this is a form of stamp duty meant for transferring the seller's name to our name. So you total up all these additional costs, it comes to about 5% of the property price. So you add it up with the down payment. All these are cash you need to have in hand, ready to pay for the property even before you sign your agreement, which is quite heavy. Imagine 15% of 500,000, that comes to about almost 60, 70,000. And we haven't even get to renovations and all that yet. No, this is just upfront cash. Yeah. Then if you come to planning for renovation, like depending on which market segment you are targeting, the renovation cost can easily go up to 50, 60,000. So well,
Renovation
that
as in
can be
like
a planning
furnishing,
of,
right?
yeah, that can be a planning. Like there are investors who tell me they don't come in the market unless they have about 100,000 in cash ready.
Mm.
Of course, there are different market. Recently, the most popular one is buying new launches. New launches are properties that are not completed, because buyers will have to take a risk of the property, whether it's doing well in the future or not. And then buying new launches, you kind of buy the property at a slightly inflated price. So to mitigate that risk, developers will usually foot the legal fees. They usually foot part of the down payment, so you don't pay so much. But at the end of the day, when you get your property, your loan value is usually a lot higher as well. So there are this risk that buyers, when before they buy property, they need to take into account.
Mm. So you're saying like investors are risking their money to do an early investment in the property to buy it cheaper, actually. That's
Yeah,
what you
and
mean.
no matter what, actually, when you're buying properties, it's almost always that you're buying cheaper because along as time goes by, um, inflation will be the first thing that brings your property price up.
Mhm.
Malaysian's inflation is about 2% every year, so you see property price easily climbing about 3 to 4% every year across Malaysia. And then the other thing you have that bumps property price is what I call the spiking effect. You see this a lot in Kuala Lumpur, in Selangor, in Penang. What happens is a sudden development takes place near your property. The LRT is the best example. Build an LRT station next to your house, suddenly your house jumps by 2, 3 times the value.
Oh.
So it jumps by another round. That's why you see certain townships like Bangsa South. I did a case study on one of their older properties that called Vista Angkasa before. It was completed around 1991, if I'm not mistaken, slightly very close to the completion date of the first LRT in Malaysia. So when the first LRT was completed, the property price doubled one round. Then
Oh.
after that, UOA came, bought the whole chunk of land and then start to develop that Bangsa South thing. The property price doubled another round.
Oh.
So when people first bought that property Vista Angkasa, they bought it at about 40 to 50,000. That was the transacted price I saw back then. Today, that same property is selling for 400 to 500,000.
Oh my God.
10 times the value. Like, oh my.
Oh my God.
Yeah, compared to other properties that doesn't have LRT next to it, you don't see a spiking effect like that.
That's crazy. That actually kind of shows like how it's also a pretty safe investment, but at the same time you can gain abnormal profit if
Yeah,
you're lucky enough.
to have like a hospital suddenly built near your house, like, oh shit,
Oh.
suddenly the price will fly up.
Then how
One,
about
uh,
demography?
sorry.
How about the population? Like if the population increases, how about that?
Oh yeah, that also affects it. So population increase is almost tantamount to inflation. Like if a particular township, that particular area's population keep growing, then that particular place is also going to experience a slightly faster price growth compared to the other areas. A good example is comparing um, anywhere within Klang Valley against Cyberjaya, for example. Cyberjaya is one of those places that we say there's no traffic jam. One of the best ways to see whether the population size is increasing is whether that place has a lot of traffic jam. Like Kepong, Puchong, these places are renowned for traffic jam. And if you think about it, the reason why traffic jam is there is because population size keep growing and growing. And likewise, if you look at property price there, right, back then, I don't think 10 years ago you can hear of Kepong's 3 bedroom going for about 500,000, 600,000. Today, you hear it going for almost 700,000, 800,000.
Oh,
New
this is why
launches
you should invest
at
in real
7,
estate.
8,
Oh my
probably coming
goodness.
close to 9 now.
Wow, 900.
Oh, madness.
Mad. It's crazy. Yeah, so like actually I actually think like you've made real estate market more attractive after this podcast. Like I actually changed the whole my whole perspective on real estate market because there were so many pessimistic view on real estate market, right?
Oh,
There's
yeah, very
a lot
pessimistic.
of yeah. So I'm interested in real estate market, and in the future maybe I'll consider investing in one, but like I don't know how to analyze the market, right? I don't know how to analyze the market. How do you analyze the market?
Okay, this is what I do before I analyze a property that I want to buy. So the back now in our current age, we are actually very blessed. Our parents' age, there is no Google. So what they need to do is they need to drive around their property,
Mm.
test, like you're buying agricultural land, you need to scoop the soil and find a botanist.
Oh.
Now we have Google on our side. So
Mhm.
Google can really solve a lot of problems. So these are some of the things that I usually search when I'm Googling about property. Um, what are the surrounding amenities like schools? Are the schools doing well? Like when you're
Mm.
buying, one of the reasons Mont Kiara is so popular is because of that two international schools, Mont Kiara International and Gardens International. So it's also very important to see how well students in that schools are performing. Chinese schools in Old Klang Road, and then that famous Wai Chai School. Yeah, this well performing schools also tend to increase the property price around that area because
Mm.
one of the requirements that I think our government posed is that you have to be staying within a certain vicinity to a school to be able to enter that school. And
Mm.
by staying next to an elite school, you have a higher chance of being able to enter that elite school. So
Mm.
that indirectly will raise the property price of that
Mm.
area also. So that's one. The other one you want to look out for is commercial and business elements in the township. Like you don't want to be staying too far away from the shop lots area. Then you have to travel, you have to drive very, very far before you can get to a restaurant or grocery store.
Mhm.
And then you also want to calculate the distance between your house and the nearest grocery. Like, is it walkable? Usually, like in Kuchai Lama, quite a number of condominiums are within walking distance to that Kuchai Business Park. So if you notice those condominiums, regardless of how badly maintained they are able to sustain a certain price and rental demand to their property. Uh, yeah, then the next thing you want to look for is infrastructure. So in infrastructure, I categorize them into three different types. The transportation type, this one I think everyone's been hearing so much about transportation. I
Mhm.
won't elaborate so much about this. The second one, which is the main one I want to talk about, these are like hospitals, police stations, fire stations. You also want to look out for this kind of infrastructure in the property you are buying, because at the end of the day, the purpose of the property is to stay or to do business, whatever the property's purpose is for. So if you're buying a residential property, you want to make sure the staying in that place is conducive. If it's not safe, then it's not going to be a very good investment. No one wants to buy it to stay.
Mhm.
So police stations, fire stations, these are essential things a township must have. And
Mm.
I realize investors tend to skip these things for some reason.
Mm.
And then it's also sometimes there are some government bodies nearby, like a court or a government official building like LHDN. So it's also these little buildings can affect the property price also. Like if there's a courtroom nearby, then there's a tendency for more law firms and lawyers to be around that area, like what we see in Paprika. And then let me see, let me think, what else do I miss out? You want to read up on safety reports of the place. You want to see what's the crime rate,
Mm.
what's the health conditions, is the place clean.
Mm.
The most important criteria I usually follow if I'm buying a residential or a commercial property is I'll check the cleanliness of the township. Like, are there enough dustbins? Are people very health conscious?
Mm.
Somehow, for some reason, if a township is very well kept, very clean, the amount of crime rate is also less. And
Mm.
in tantamount to that, capital appreciation and demand is also very high. Like you can look at Desa Park, that's a very good example.
Mm.
Sunway, the person who developed Sunway, he himself also goes around collecting rubbish.
Oh wow. Okay.
Like there were reports of Jeffrey Chia even like going around taking care of this. This is the civic mindedness that goes a long way when you're buying your first property or your property for investment.
Mm.
Then last but not least, this is a trick I learned when I was practicing real estate.
Okay.
You want to look at the real estate agent's activities in that property. Like if you type the name of that condo into your search panel and you don't see any advertisements from property agents, then that's something worrying. Because
Oh.
whereas if you type your name of your property into search, you see like 100 agents advertising, 200 agents advertising, then that's actually a very attractive property. To put to perspective, for an agent to advertise a listing on iProperty or Property Guru, they need to prepare about 1 to 200 ringgit per listing per week or 2 weeks, depending on what's the promotion then. So imagine if that agent's posting about 4 listings a week, that easily, no, sorry, 4 listings in 2 weeks, that easily comes to 800 a month.
Oh, wow. So like even the real estate agents have to be careful what they list.
Yes, because if they list something, that's their own money they are spending there. And if they list,
Oh, it's their own money.
yes, correct. In the real estate industry, not many companies, in fact, most companies don't pay for our advertisements. The real estate agent has to plan their marketing planning, where they want to put the property, what platform they want to use.
Oh.
Yeah, so using using the number of agents willing to advertise that property is actually a very good indicator.
This is
Especially if you like go on iProperty, you see a lot of featured listings, premium listings. These agents can easily dump. I have seen an agent dump up to 20, 30,000 on advertising a month. Yeah, so imagine if you're buying that property, you are the owner for that property. How do you feel if an agent is dumping 30,000 to advertise your property?
you feel great. Like you feel like very optimistic for your property.
Exactly. Yeah. So that's one
Wow.
of the key to see whether that property is of good value or not.
So maybe I should start searching for properties that only has 200 real estate agents.
Yeah, that's a good tip.
And also I've actually seen something on the news where the place with good lighting has very little crime rate. Is that true?
Yes,
Good
right.
lighting.
True. I also this one came from someone who commented on my TikTok that if a place is beautified very well and mainly flowers, like you plant flowers along the street, beautify the street, it can also reduce crime rate. And then Australian universities have also did studies where you broaden the road, keep the road to a certain broadness, that will also reduce crime rate. So yeah, this is the other thing about infrastructure you want to look out for also when you're buying a property, like how much aesthetic and how well kept that place is. Yeah. Oh yeah, and like you mentioned, how bright the place is. This can really play a big part in your property's value.
Okay, that's like so much honey tip that I have to absorb right now.
I hope I'm not dumping too much, overloaded.
I mean, it's gonna help anyways in the future. I really thank you for this knowledge actually. Do you have any more stuff to add? Like, do you investigate petrol station toilet if it's clean or not? Or
Sometimes yes, but that one,
sometimes.
because okay, this one is another thing I can give that for people who are looking to buy real estate for investment. When you study an area and you wanna, the number one thing you buy a property for is either to rent or to sell. I mean, that's the kind of returns that you're looking for. So if you are looking for a rental return kind of area, you want to look for somewhere that has a sizable moving population. Moving population meaning these people, they don't plan to stay in that area for a very long time, but they have to stay there. So usually there is a certain purpose that requires them to be there for a certain period of time. Like Sunways, the purpose is study. They need to go to the university, so they spend 3 years there. Bangsa South, KLCC, they need to go there for work, or the most short term, going for holiday. So you want to make sure if you're looking for rental returns, your property is able to cater to those purposes.
So that's why Mount Kiara's real estate price is so good because there's so many expats.
Mount Kiara's real estate price, yes, like you meant, yes. So this is another special thing. The opposite of moving population is the organic population, or what some other people call the stay-in population. So these people, they buy a property to actually stay inside. And because they stay in the property for very long period of time, so the property price remains very stable. Because after all, if you're not selling it, the price won't drop. And then because the price there becomes very, very stable, when they sell, they have a very strong command on how much they want to sell. Probably in the entire neighborhood, they are the only one selling. So Mont Kiara is a very good example of an organic township because you don't see its rental price. You don't see its rental price being the main thing that commands its demand. I mean, its rental is very good, it's very high. But if you compare that to its capital appreciation, that one is even more attractive.
I see. So there's, what do you call, moving population, then there's this organic population.
So when you're buying a property for investment, you kind of want to ask yourself what kind of returns you want. If you're the type that plans to sell your property in 10 years later, you're going to look for somewhere that people actually want to stay. There is buying for own stay demand. And then you want to buy and hold that property for some time. So the risk you'll be holding for usually these kind of areas is rental returns are very low. They will not be able to cover your loan. After all, nobody intends to rent that. People usually buy to stay. That's why rental demand is a lot lower. As compared to if you want to invest in a moving population area, capital appreciation might not even exist. Like, might remain the same price for 10 years, etc. Or even capital appreciation might be very little. But if you take its rental return, sometimes it can be double, triple of your loan.
Oh, like the total rental profit.
Correct. Like Airbnb areas, sometimes their collected profit for 1 month is known to quadruple the loan that was given.
Oof. My wallet is itchy right now. I have to open it right now and like invest in Sunway. Get rental fees right now.
The students are paying very, very good rent.
Yes, if I look at places like Diletour, it's overpriced. It doesn't make sense. It's way too pricey, but people still go there. So that
sometimes it's,
that's what I'm surprised.
So it can be because that property is way better maintained compared to the others around it. I haven't went to Sunway for a very long time, so I'm not too very sure which is the most competitive property there. But I do notice that properties around the lake, they tend to be better maintained than those that are not in Sunway Geo. Like if we compare Sunway Geo against Sunway Mentari, the class and maintenance level is heaven and earth. So the rental price is also like heaven and earth.
So which one is better, Geo or Mentari?
Oh, Geo is way better.
Geo is way better.
You see it's so well kept. It's almost like a mini Mont Kiara there.
Oh yeah, it is. I actually came to Sunway and I was pretty shocked to see their rental prices. There's not much difference with Mont Kiara. So anyways, that was a really good insight. Thank you, John.
One last tip I can give. Since everyone is buying new launches, that's probably the easiest property we young people can buy. You don't need to throw so much down payment.
New launches.
Yeah, when you're buying a property from a developer, there are 4 things you basically want to look at. And these are not location and all that. Let's assume we already done our homework, location, everything. We already did our study. There are 4 things you look at. The first one is, and they're all about the developer. So you want to really check the developer's background. The first one you look at is what are their past workmanship quality. Like Exim, for example, if you really like Exim's property, Then how you gonna know whether this is a good developer? You go and visit some of their older condos and see what is the workmanship quality like for these condos. Are there a lot of crackings, etc., inside the property? Then after that, you wanna browse for their legal records. Are there anybody suing them? Are they having any fines from the housing department? Do they have their license revoked? These are some of the important things you want to watch out for. And then the third thing is how long have they been in the industry? Sometimes a more mature developer tends to have a better understanding of how a particular township is growing. Like Bangsa South is known to be the home of UOA. So if you notice, UOA's understanding of the core of Bangsa South is very good. Their properties are always fastest to rent out, priced very well. Even though you get it like 1,000 over units inside a condominium, you can see its rental price growing very, very fast. Likewise, for Mont Kiara, most people want to buy the UEM range because they are the main master developer. So their age in the industry and their age in that area matters quite a lot. And then the last one you want to look for is the funding. You want to check their financial background. Not so much for the property being abandoned, but whether they can deliver on their promise. Like you don't want a developer to halfway suddenly go through a cash crunch, and then he had to cut costs on the materials that he's using, cut costs on the workers that is being used. Instead of using, say, Malaysian architects, he suddenly start hiring, I don't know, from some third world country to do the architecture, and then this can impact the quality of delivery that you are buying. So you want to look at the financial reports of the developer, make sure they're actually making a profit rather than a loss.
All right. Then I believe there are some analysis to make on residential and commercial areas as well. Can you just briefly talk about a few points? I remember there are like you gotta do some interviews with some residents.
Oh, okay. This one is more in depth. So sometimes you want to get some insider news of how safe the area is, but you come and visit the area, you can't really gauge whether this place is really safe or not. So one of the ways is you can interview the local people who have been inside there for a very long time. The easiest one to target is the restaurant owner. Very weird. Restaurant owner and the barber, the hair salon. These two are the easiest to target. You go in, you just pay about 20-30 bucks for a haircut or a meal. Then you just sit them down and then start interviewing them. How long they've been here? What was the place like 10 years ago? Willingly spill all the stories about this place for you.
Oh, it's great. I've been in one interview and they know a lot of stuff. So this is very trustable. How about the surroundings of the residential and commercial? Is it also very important?
Yeah, you need to watch for like how clean it is, the hygiene of the general shops. Sometimes the best way to see whether a township is a good township is you observe the hygiene in the restaurants. If the general, like if you go into 2-3 different restaurants and you notice the hygiene is not very good, then that's a warning sign that you have to take back with you. I mean, you have to take back, like residents there aren't really concerned about the hygiene of that restaurant. That's why they are willing to eat there and all that. Makes you wonder, like, what kind of place are they staying if they're so okay with this kind of level of hygiene? And then also the grocery centers. Usually the best place to check is the grocery centers and the restaurants. How well kept is it? How clean is it? This will tell you a lot about the place.
Yeah, and also I know that it's very important to kind of like experience how it feels like walking around. It's very important to gather primary data, and also the price of the food as well.
Oh yes. Some areas the price difference can be so far apart, like Mont Kiara's food price and the Tepong's food price, almost double.
Yeah. And also we talked about the primary data, right? So
Mm.
you want to be actually visiting the property you wanna try you're interested in, right?
Yes, correct. So when you visit the property, not just you want to look at how well your the unit that you are looking to buy, how well it's designed or its interior. You also want to look at the rough condition of the condominium's exterior, the facilities. Um, One of the reasons why it's important to visit the facility area to check on the facilities, you're going to see how well this management is at, how good this management is at taking care of the facilities.
Mm.
I've been to some condominiums where the swimming pool is full of algae.
Oh,
That's not a very good sign at all.
yes. That's not a good sign.
Mm. Yeah, then you want to make sure this kind of small little details. Sometimes it's very unnoticeable, but you want to look out for all these small little details to see how well the management is taking care of this property. Because you don't want later on when you buy the property, you end up paying 300, 400 a month for maintenance fee, and the management's not doing very well.
Mm. Yeah, I feel like the most important thing is you gotta try to empathize to the residents, like how it feels like staying there. You gotta actually visit
Mm.
the property and like look at the details that you might not realize when you don't live in. But you know, when those little things can actually bother you when you actually live in the area, like the longkang smell, for example.
Yes.
Oh yes, like in the toilet, you suddenly smell some poop smell when you're showering. That's not that good. Or like
Oh yes.
you're swimming and there are a bunch of bacteria in the pool. Thinking about that, it just makes me vomit. So I feel like those factors are crucial when it comes to buying properties. So
Mm.
I feel like you gave us a lot of insights on real estate. Thank you so much, Jonathan.
Oh, welcome, you're welcome. But if anything, the number one thing to take away, I think, is at the end of the day, the purpose of a property, residential property, uh, is to stay. When you buy a house or a condominium to invest in, the ultimate aim is you want to rent it out to someone who wants to stay there or sell it to someone who wants to stay there. Um, so the main goal behind how you choose your property should be finding something that gives a very pleasant staying feeling to it,
Mm,
rather than how much returns you can get from the property, how much
mm.
is capital appreciation. If the stay is really, really pleasant, then the capital appreciation will come because it's a really good product.
It was just naturally come along, basically.
Mm.
All right. So, Jonathan, yeah, you said just experience it, try to empathize. That's what you said. The most important thing is the pleasant stay. And also, you mentioned about your TikTok, right? You
Oh
can,
yes, yes.
yeah,
Do
you guys can find more stuff, more insight, more information, and more knowledge on Jonathan's TikTok. Let's talk property, right? On
yeah, yeah.
TikTok. And
I post every day. Every
every
day I'll
day,
at least have one episode.
one episode.
Yeah, come and visit. It's called Let's Talk Property. LETSTOKPROPERTY.
All right, Jonathan. All the best for your TikTok. And thank you for coming to our podcast. This was Taylor's AKPK with Jonathan talking about Beginner's Property 101. Thank you, guys. Thank you, Jonathan.
Oh, thank you for having me.
Thank you.